Hello, hi, it's Adil bringing you a review of the FTSE 100 and from an intermarket analysis perspective. Okay, so the FTSE 100, quite a substantial sell-off today, even though I myself was stopped out on the FTSE once, and I currently have a long position that still remains active. A bit of a rough day for me today. Ended up, I think, I'm minus 90 so far, starting of the week, so not a good week, not a good start to the week. Very similar to last week as well. Finished with about 117 points last week, so I had a Nasdaq long that was active from Friday. That got stopped out as well. My FTSE got stopped out, and I also got stopped out on another index. I can't remember now. But basically, very not what I anticipated, and I'll soon elaborate as to why. First of all, the Asian markets obviously sold off quite substantially overnight. That obviously caused the FTSE to gap lower, or close the gap lower, shall we say. So if I just show you the chart, the FTSE 100, as you can see, if you look at a 60-minute chart, I had there was an inverted head and shoulders pattern which I had highlighted to subscribers, and that's what I expected to play out, because I expected the euphoria of the Scottish vote to continue and obviously propel the markets higher. As you can see there's a neckline, inverted head and shoulders target, and I expected the markets, if you look at the weekly chart, so as you can see this is inverted head and shoulders target gap fill. So if you look at my 10-minute chart, you can see how I expected this gap to be filled and that to act as support, and obviously once the gap had been filled, acted as support, and obviously for the markets to bounce. So that wasn't the case, because we got 6820, we gap lower. Asian markets obviously being down overnight, hence the reason why we closed the gap at 6820. US markets closed down late Friday, and the futures are down as well, hence the reason why hence the reason why obviously the FTSE moved lower, and once the gap had closed I expected a bounce and a move higher because of the euphoria post Scottish vote, okay, obviously for them to remain within the Union. And given the fact that the uncertainty, etc., and obviously catch up to global markets, that obviously none of that transpired, none of that actually materialised, and the markets have sold off ever since, especially with sterling being lower as well. That should obviously help boost and propel, and given the fact that the BOE remains dovish, the BOJ remains dovish, central banks, or Miss Yellen was interpreted as being dovish last week, and obviously Mr. Draghi's act of or balancing act or a trick of QE. So obviously he was discussing the fact that he's going to remain dovish and remain supportive in terms of monetary policy, etc., Although we did have some comments over the weekend with regards to anti-QE comments, obviously emanating from Germany once again, Bundesbank, Mr. Wiedmann. Now obviously that did obviously cause the gap down as well, hence the reason why we get to gap fill support, and obviously then the markets bounce. So these are all factors at play. So I did expect obviously the FTSE's early weakness, obviously gap fill, and then I expected the markets to propel and continue higher given the euphoria over the Scottish vote, and obviously Scotland remaining in the European Union, and that obviously didn't transpire as well. So given the fact that that didn't transpire, obviously the markets continued to sell off. Why? The Tesco factor. Okay, I didn't realise that Tesco would have such an impact on the FTSE itself, and obviously send the FTSE lower. But even with Tesco being down as well, that was certainly factored in as well. So if I bring up a chart of the retail sector, for example, let's bring up a chart of the retail sector. Where are we? Okay, so retail sector, as you can see here, the retail sector gapped lower, closed the gap, and then actually bounced and almost closed the gap and almost went flat on the day. So you can't really focus on the retail sector itself and the weakness in the retail sector, because yes, it did gap lower, it factored everything in, and obviously the FTSE was expected to continue and propel and move higher. So that again was a conundrum. So I'm still long on the FTSE 100, and I do expect the FTSE to certainly move higher, and we'll see exactly how this market transpires. Now if I go to the daily chart and let's see what the damage has been done, because my analysis was certainly wrong today. Okay, so I expected this downward sloping contracting wedge pattern, obviously the breakout that we've got, to continue, given the fact that the Scots had voted for remaining within the European Union, given the fact that there was a head and shoulders formation. This is the one that I had highlighted. There was two scenarios, and I expected the Scottish vote to continue and propel the short squeeze argument. So there was your head, there was your right shoulder, and obviously the markets were supposed to go down given the fact that the Scots vote for independence. They had offered, they wanted to vote for remaining within the Union, so that's why we had the short squeeze, the relief, etc., etc. And obviously this market to continue after breaking that downward sloping contracting wedge, or falling wedge pattern, okay, contracting wedge pattern. So for now, obviously I have to ignore this, and technically you can say from a trading perspective that this HNS certainly needs to be paid attention to for now, and we'll see exactly how this market materializes. My bias, even though we are within this potential support zone, I expect a bounce, number one, but I don't expect the HNS to play out unless US markets potentially carve out a top, and then obviously that's a totally different story altogether. Now one can argue here, right, as we are approaching or understanding this, that we are putting a potential right shoulder and the HNS formation is certainly valid given the fact that we had a bearish engulfing candle and the bears remain in control. So that's another aspect that we have to look at the market from as well. Okay, and take that into consideration. So for now, I need to be open-minded. The FTSE itself needs to be taken from a day-to-day basis, obviously based on Asian markets, and see how they react, and obviously the currency as well, keep an eye out with regards to that. So the only concern with regards to being bearish in the FTSE, or well, the most important concern, is the fact that you've got an inverted head and shoulders on the FTSE 250, as you can see there, and the FTSE AIM All Share Index, inverted head and shoulders, both holding a 61-75% retracement. So hence the reason why I will still maintain my bullish bias in the FTSE, given the fact that the Scots have voted to remain within the European Union, so therefore short squeeze certainly will be the predominant theme. Okay, that's basically how I'm understanding it. Okay, so it's very important. Okay, so that's the argument from a larger time frames. Let's have a look at the argument from a smaller time frames now and exactly where we are. Okay, so obviously we've gapped lower. We've basically left a gap open now, so there's gap at 6834. That will be my target on the upside on all my long positions. We're into pivot S3 support and obviously horizontal support here. So 6770, 6760, and we've got this lower level here at a 6750. So that's basically the zones that I'm going to be focusing on. So 6750, 6760, these will all be key pivotal support zones for the for this marketplace, basically. Okay, so that's basically what I'm looking to for the markets to transpire. Obviously you've got horizontal resistance at this region now at 6795, got to watch out for that. Obviously the 200 MA at 6815, and obviously gap fill on the upside. So there's your support and resistance levels on the 10-minute chart. 60-minute chart, like I said, the inverted head and shoulders pattern has failed. We've failed to hold this key trend line as well, so all this needs to go. Okay, and now for now we're just focusing on the horizontal support levels that we have in this zone at the moment, and that's all we can really rely upon now for now. Okay, so that's basically where we find ourselves, pivot S3, and quite a substantial sell-off given the fact that this Tesco itself, given the fact that it's overstated or missed out, overinflated its profits, etc., and missed by 250 million is a real concern. Obviously overnight you have Chinese data that will be dictating, and that will decide as well, and that's basically where we find ourselves, folks. Obviously you have this HNS formation here. The right shoulder really is circumspect. One could argue right now at this very moment, or at this juncture, given the fact that we've got a 60-minute chart, that you do have a potential here for a HNS formation itself. So given the fact that if you do obviously potentially go up and close this gap, that'll create the right shoulder, then down we go. But again, early days, this is all hypothetically speaking for now, and we'll certainly see. But my bias is the fact that we are going to bounce from here. Obviously it's certainly my bias is certainly taken, given the fact that my impartiality comes to question because I remain long on the FTSE. But this is certainly my argument that we do expect to hold this, given the fact that the Scots have remained within the European Union, and obviously all central banks remain dovish, especially Mr. Carney. So that's basically where we are, and given the fact that the retail sector, like I stated, retail sector obviously wants to close that gap, and that's basically what we're interpreting things as. And obviously with regards to Mr. Carney and his and his LTRTO. Basically, that's certainly working, and Mr. Carney did remain dovish today as well. This pattern certainly needs to be kept an eye out for, because obviously the FTSE itself is a commodity index. The US dollar remains into resistance, and obviously commodities are now all touching or potentially hitting support. So there's your left shoulder, head, and obviously the right shoulder. And again, this all coincides given the fact that we had to close the gap, which we did. And it all coincides with the FTSE 250 and the FTSE 100 AIM, okay? The small cap index. If a small cap index is showing you a bullish pattern, then obviously what do you think the large caps will do? And also adding the fact that you've got the FTSE 250, which is a cross reference, and that obviously is painting it's an inside bar today, not like the FTSE, which is a bearish engulfing candle. Hence the reason why I will err and remain on the bullish side, and then remain in the bullish camp for now. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.